All right, hey, what's going on? This is Dan Keller, your mortgage advisor at New American Funding. I want to welcome you to another episode of Making Sense of the Market. And today is Saturday, April 1st. I'm over here in Spokane, Washington at my daughter's volleyball tournament. And I wanted to make sure I got this information out to you this week because it's I got some pretty good information for you. This is something that I want you to pay close attention to, and that's the trading range that we've seen over the last 2 weeks. It's leveled off. And I kind of like that. It's been crazy volatile for the last 2 or 3 months. And so this is good news. Keep in mind, though, that a lot of the news right now is hinging upon what happens or doesn't happen with the Healthcare Reform Act that President Trump is bringing before Congress. So I'll keep you posted on that. Please know that if something does get passed, it will cause an impact in the markets, and I'll keep you posted on that. Most likely, if it does get revised or repealed, the stock market could improve, causing mortgage interest rates, the bond market, to worsen, and rates would go up. So I'll keep you posted on that. Something I do want to I want you to pay close attention to right now is consumer confidence. This is big, you guys. Now listen up. I brought this onto the show about a month ago, and I talked about kind of the history of consumer confidence reports. These reports, the consumer sentiment report, is released every single month, and what it basically takes the temperature on is the consumers and how confident they are based off of their spending levels in the marketplace. Check this out. So this last week, which is not showing on this chart, but this last week we had the highest level of consumer confidence since, get this, 2004. This is what I want you to pay close attention to. High consumer confidence, crash. High consumer confidence, crash. High consumer confidence, crash. You see this repeat itself. Boom. Now this is 2001. This is 2004. We all know what happened right here in 2008. Massive crash and then a comeback. This comeback we are still on. Pay close attention to this. I think we got about another 1 or 2 year run at this, and I think we're going to see that correction, all right? Now, that doesn't mean bad news for the housing market. It does mean that the stock market will correct itself. Pay close attention to that. I just want to bring it to your attention so that in a year or two when this happens, you can say, hey, my mortgage guy Dan did bring this up. He's spot on, as always. And so I just wanted you to know that. So let's talk about some of the news. The Dow is up again. It's still doing really well. It's still on a pretty nice run, but it's playing politics. So depending on what does or doesn't happen with the Healthcare Reform Act, it will move. The other thing is, like I mentioned earlier, pay close attention to what happens with Trump and Congress in regards to the healthcare. So 30-year fixed interest rates for government loans, VA and FHA I actually locked a loan at 3.75, a VA home loan this week at 3.75 with minor points. Conventional 30-year fixed, 4.25 to 4.375 to 4.5, depending on credit scores. Remember, rates are not just based off of what the internet tells you. Interest rates are based on your down payment, the type of property you're financing, your credit score. There's a lot of variables that go into your interest rate, how many discount points or closing costs you wish to pay. This is just a generic kind of understanding of where 30-year fixed rates are trending, all right? One of the last things, I just interviewed this last week, the owner of Blue Water Credit. His name is Jeff Sipes. Blue Water Credit is the credit repair company that I recommend my clients to if they need credit repair assistance. We talked about 4 factors this last week, and I'm going to share the video interview with you. It's a 4-minute interview, and you're going to get a ton of value from it. But we talked about the 4 factors to add 100 points to your credit score. Even if you don't need 100 points, 4 things you can do to add points to your credit score. Guys, I want to show this chart to you. There really are 4 things that impact whether your credit score is high or low, and it's based off of 1, your payment history, which is the big one right here. 2 is the level of debt. Okay, the level of debt is your balance to your maximum limit, the ratio between your current balance and the limit. 3rd is the age, how long they've been open. We talk about 24 months being that kind of that magic number. The 4th is types of credit, all right? Revolving credit, mortgage credit, auto loans. And then the 5th is credit inquiries, how many times you are actually applying for credit. So stay tuned for this interview. This is all I've got for today. Excuse me, I need to head back to the arena and watch Allie spike some balls. If you need anything, let me know. I look forward to being a resource for you. And take care, okay? We'll talk to you next Friday.